Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you would like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at New York Sugar. In last year's commentary, I pointed out that, and I quote, in 2020, the last 2 months in point, it looks like the market is disposing of the bearish pitchforks altogether. As in November, the market breached the upper time. Currently, well, that is down at 1250. So anyway, going back to the quote. And in December, we saw a close clear over it, end of quote. Well, the market did dispose of the bearish pitchforks as prices moved higher, though I personally do not think that was, big as it was, the major feature for 2020. You see, 2020 also ended up as that rarest of beasts, an annual key reversal up. This set the stage for 2021, where we had a move up over both the 50% Fibonacci line of the 2016 to 2020 move at 1648, and also the more important 50% absolute Fibonacci line for the 21st century at 1809. This was all done within the first 2 months of 2021. But it was a little too much and too soon. So we dropped down for March, down through the 50% Fibonacci line at 1648, and all the way down to the combination of the 61.8% Fibonacci line of the same move at 1472, plus just above the 5-year moving average, currently at 1418. In the process, the market broke down through the extension of the 2019 to 2020 diamond pattern uptrend trend line, currently at 20 even. Though I have kept that on the monthly chart as it would become interesting when I discuss the diamond pattern. Anyway, April made a bullish engulfing pattern that was the start of the most recent move higher. Back up over, and importantly, closing over both the 50% Fibonacci lines. Now, stepping back a bit to the diamond pattern that's below, once again. Last year, I gave a potential target X for this pattern in the 2140 area. I made the point last year, and I quote, "Please note this is a multi-year pattern. Do not expect it in the next weeks or months unless it really wants to," end of quote. Well, the market wanted to, and prices rose, peaking in the 2060 to 2070 area. This is where I have to own up on a point I made. I gave that 2140 target X as a full and secondary target for the diamond pattern. Now, I omitted the primary target X1 for this pattern in the 1910 area, which was a purely doable target. I suspected the market aimed for the full secondary target. However, after achieving target X1, we have seemingly peaked, at least for now, with November last year forming a combination of a key reversal down plus an inverted hammer pattern. In this case, seemingly a bearish pattern. Thus, we are now back down below the extension of the diamond uptrend trend line and challenging the reassigned early 2020 to date uptrend, currently at 1891. So far, it looks like both uptrends are losing the fight. The fight is not over yet. One final point, which is a reprise of a major pattern I noticed this time last year. I'll quote from my annual commentary from the start of 2021, as it is even more valid than it was last year. And I quote, "In September, we had a bow tie formation of the moving averages. Currently, it looks superficially bullish. However, the moving averages involved, the 2-year, that's currently at 1559, the 1-year, currently at 1813, and the 3-year moving average, currently at 1457, went into it in the wrong order. Nevertheless, this is potentially a very bullish indicator for the future, as it would suggest a significant action. potentially bullish in the next 15 to 20 months. That is somewhere between March 2022 and July 2022. This is something to place in a future diary or note on a future calendar, assuming it plays through. I think that this is, much as last year, a suitable point to end on.